Attention all veterans and active duty members. Scott Dill, the owner of Texas Home Loans here to help you with hacks that'll help you get into your home with ease. Look no further, introducing the ultimate VA guide for mortgage loan hacks. Hack number 1, boost your credit score. A higher credit score means better loan terms and interest rates. Pay all bills on time and minimize debt to optimize your chances for approval. Hack number 2, understand your entitlement. Know your maximum loan amount you qualify based on your VA entitlement. Every dollar maximizes your buying power. You can contact us. I can get you your COE. We can look at your DD-214. We can get that squared away and figure out your exact entitlement. Hack number 3, explore lender credits. Some lenders offer credits that apply towards closing costs on interest rates. These are some of those programs. Sometimes they roll out, sometimes they don't. If you get a hold of us, we'll let you know exactly which ones do roll out. Utilize the VA appraisal process to your advantage. That helps make sure that you get the home value you need. Now, in your VA contract, you cannot waive your Tidewater rights. Tidewater rights are when you buy a house, you say, I don't care what it appraises for, I'll still be liable to purchase the home. VA does not allow that. It's a consumer protection item. It's a good thing it's not waived, because if it does come in low, you could be stuck having to make up the difference. But because the Tidewater is still in place, if it comes in low, you can get out of the contract. Hack number 5, avoid funding fees. If you've got a service-connected disability, which will show up in your COE, you could be exempt from some, if not all, of your funding fees for your closing. And this helps you minimize your loan size, because that goes on top of your loan size when you get that loan. Now, hack number 6, consider refinancing options. After you make 6 payments, or you've had a VA loan for 210 days, you're eligible for an IRRL, an interest rate reduction loan, otherwise known as an IRRL loan. This is a great product. It allows you to lower the interest rates with hardly any fees. We only have a $500 fee for this loan. You've got decreased title insurance. There's no appraisal, no income docs are required, and I can zero your cash flow, so no asset docs are required. The only thing I need is your insurance and clear title work. You do have to pay that mortgage on time. You can't have any mortgage lates in the last 12 months to get an IRRL loan. Hopefully this helps. Don't miss out on these expert tips and tricks from Texas Home Loans.